Hello and welcome. We're here today to talk about something absolutely critical for every UK business owner, self-employed person, or landlord. In 2026, HMRC is rolling out the biggest tax shakeup in a generation. What you do over the next 12 months could genuinely define your financial future.
Now, this briefing has been put together with the experts at My Tax Accountant, and they've helped us break down what you absolutely need to know. Because let's be clear, the era of the simple once-a-year tax return is well and truly over. What's coming is more digital, it's more frequent, and it's far, far more transparent. So you might be wondering, why is all this happening right now? Well, HMRC is on a mission to modernize the whole system and close what they call the tax gap. This isn't just a few little tweaks here and there. This is a fundamental change in how they gather information. And the big question for you is pretty simple. Are you actually ready for this new level of scrutiny? Okay, let's kick things off with the change that's going to hit the most people first. It's all about how you report your UK income. The first pillar of this whole shakeup is the expansion of a program you might have heard of, Making Tax Digital, or MTD for short. Right. Take a good look at this timeline because it shows just how fast this is all rolling out. It all begins in April 2026 for anyone with a gross income over £50,000. But just 1 year later, that threshold drops to £30,000. And by April 2028, it's down to just £20,000. The message from HMRC is crystal clear. This isn't an if, it's a when. Even if you're not in that first wave, believe me, the clock is ticking.
Now, here's where a lot of people get caught out. Let's take Charlie, a decorator based in London. His business brings in £42,320, and he also has a rental property that earns him another 10 grand. Now you might think, individually, both of those are below the £50,000 threshold, but HMRC combines them. His total gross income is £52,320, which pushes him right into that very first wave from April 2026. It's an absolutely critical calculation to get right.
So, what does being MTD compliant actually mean for you day to day? Well, it's a big shift from a once-a-year event to a continuous process. There are three main things you've got to do. First, you have to keep digital records using compatible software, no more shoeboxes full of receipts. Second, that mad year-end rush is gone, replaced by sending quarterly updates to HMRC. And finally, you'll submit one final declaration to tie everything up after the tax year ends.
And here's a pro tip that catches so many people. When HMRC talks about gross income for these thresholds, they mean your total turnover before you take off any of your costs or expenses. So for Charlie, it's his total sales invoices and the full rent he gets, not his final profit. You could be making a very small profit but still get pulled into MTD if your turnover is high. That's a huge point to remember.
But the drive for digital reporting doesn't stop with your regular income. Oh no. Now we're going to shift gears and look at the world of digital assets because a massive transparency push is coming here too. It's all happening under something called the Crypto Asset Reporting Framework, or CARF. So, what on earth is CARF? Well, think of it as a new global rulebook for tax transparency that officially becomes UK law on January 1st, 2026. In simple terms, it means crypto exchanges and other platforms will have to automatically report your transactions directly to HMRC. For the taxman, it's about closing that tax gap. For you, it means there's really nowhere to hide your crypto activity anymore.
Now, you might be thinking this only applies to the big, famous crypto exchanges. But the definition of who has to report this information is deliberately very broad. It's designed to catch not just the major exchanges, but also lots of wallet providers and other services that help you buy, sell, or swap crypto. The chances are, if you use a platform for your crypto, it's going to be reporting on you.
And the timeline here is really tight. The rules kick in from January 1st, 2026. That means from that day forward, these service providers have to start collecting data on you and your transactions. Their very first annual report covering the 2026 calendar year will then be due to HMRC by the 31st of May, 2027.
And that's not all. Here's where things can get even more serious, especially for businesses with any kind of international link. We're now looking at updates to the Global Rules for Automatic Information Exchange, which is known as the Common Reporting Standard, or CRS.
Okay, I really want you to pay close attention to this slide. Get your calendar out and circle this date, the 31st of December, 2025. This is an absolute, non-negotiable deadline for a huge new registration requirement. It is just around the corner, and ignoring it is simply not an option.
So, what's so special about this date? Well, HMRC is completely changing the rules. It used to be that you only had to register with them if you actually had something to report. Not anymore. Now, all UK entities that are classified as a financial institution
have to register with HMRC by December 31st, 2025. And here's the crucial bit. You have to register even if you have zero to report. That old exemption, it's gone. Registration is now mandatory for everyone in scope. Now, you're probably sitting there thinking, well, hang on, I'm not a bank, so this doesn't apply to me. But are you absolutely sure about that? The definition of a financial institution for these tax reporting rules is way broader than you might think, and it catches a lot of businesses completely by surprise. Here's another pro tip for you. If your business holds, manages, or invests financial assets on behalf of your clients, even as a tiny part of your service, you could be classified as a financial institution. We're talking about certain types of investment managers, trusts, even some holding companies. Getting this classification wrong and failing to register can lead to some very, very serious penalties. So we've covered the rules that are likely to affect you directly. But it's really important to understand that these UK changes aren't just happening in a vacuum. They're actually part of a massive global trend towards tax coordination. And it's being led by two big initiatives you'll hear more and more about: GLOBE and CBAM.
Let's break those down. In simple terms, GLOBE is all about making sure massive multinational companies pay a minimum level of tax no matter where they're based. CBAM is different. It's an environmental tax on certain goods imported into the country, like steel or cement. Now, these probably won't affect your small business directly, but they prove one thing: tax is becoming more global, more coordinated, and much more regulated.
Now, all of these new rules, as you might expect, come with some serious teeth. Stay with me. This next part might surprise you. We're now going to look at the very real and very painful financial consequences of getting this wrong. Just look at this table. This shows you exactly how serious HMRC is. Don't think of these as little slaps on the wrist. For the crypto and global reporting rules, just failing to register on time starts with a £1,000 penalty plus £300 for every single day you are late. A missing return can climb to £5,000 plus £600 a day. These penalties are designed to hurt, and they can spiral into business-threatening amounts incredibly quickly. Okay, I know that was a lot of information, and some of it probably sounded quite alarming. But the goal here isn't to scare you, it's to prepare you. So let's switch our focus now to the solution and talk about the practical, actionable steps you need to take right now to get ready for 2026. Now, before we get to that final step, a very quick but important note. Everything we've talked about today is for general guidance only. Tax is never a one-size-fits-all thing. Your situation is completely unique. That's why you should see this information as a starting point, not as substitute for proper, professional, personalized advice. And that brings us to the most important takeaway: you do not have to try and navigate this maze all by yourself. The single best thing you can do is get professional advice now, before these deadlines start looming. The experts at My Tax Accountant are ready to look at your specific situation for MTD, CRF, and CRS, and help you build a clear plan to stay compliant. You can reach them on 0208-570-8531, or you can email them at info@mytaxaccountant.co.uk. The changes of 2026 are coming, there's no doubt about it. Make the decision today to be ready for them. And of course, please do subscribe for more essential updates. Thanks for watching.